Hey guys, welcome back to Ethereum Update. I'm Bob Chow. It's great to see you guys again. Today I found a really cool article on TechCrunch.com about a fund of cryptocurrencies called the Hold10 Index. And basically, the Hold10 Index is a passively managed fund where they buy a bunch of cryptocurrencies and they're going to hold it for a period of time for you, and you pay them a management fee, and you just sit on it and you just wait for the fund to appreciate. So what they're trying to accomplish is they're trying to accomplish a mutual fund for cryptocurrencies, and they're specifically trying to act like an index fund such as the Vanguard 500 index, the VFINX index, where there's not much active trading. It's just passively managed, and they just hold, and they're just completely transparent about what they hold. So in this video, we're going to look at their specific allocation of cryptocurrencies. That is, what percentage of their overall portfolio is in what cryptocurrency. Second, we're going to kind of have a more general discussion about what you and I feel is a good allocation of your portfolio amongst the different cryptocurrencies. And third, I'm going to discuss whether I think this fund provides a good service for its investors. So, with respect to the first question, I'm looking at their website here, and basically, I'm going to provide you a link to their website below. Their their specific investment fund is called the Bitwise Investment Fund. It's also referred to as the Hold10 Index. And basically, looking at their composition, out of all of their investment, they have 63% in Bitcoin. So about 2/3 of their entire allocation is in Bitcoin. And sorry, if I didn't mention before, when I say Hold10 Index, their goal is to invest in the top 10 cryptocurrencies, I think by market cap value. So their number one investment is Bitcoin, and they're investing about 63%, or about almost 2/3 of their total fund into Bitcoin. Next, they invest about 18.23% in Ethereum. So, about a fifth, or about almost 20%. Next, it's Ripple at 6.01%. Then next, it's Bitcoin Cash at 3.72%. Then it's Litecoin at 2.52%. Then it's Dash at 1.98%. Zcash 1.75%, and the rest, Monero, Ethereum, and Neo, are all below 1%. Specifically, Monero's at 0.95%, Ethereum Classic at 0.94%, and Neo at 0.85%. So, they're definitely Bitcoin and Ethereum heavy, as you can see. Bitcoin and Ethereum added up account for more than 80% of their overall their overall their overall pie. So basically, 80% of all of their investments are just in Bitcoin and Ethereum. In particular, Bitcoin at 63%. What do you guys think about that? I personally agree that Bitcoin should be represented heavily within their composition. 63%, I think that might be, for me, a little bit high. Just looking at my own percentages, I think that Bitcoin is about 50% for me, and then Ethereum is about 25%, and then I have other holdings in Neo, Ripple, and I think IOTA. So Neo, IOTA, and Ripple make up the last 25% for me. So just again, I have about 50% in Bitcoin, 25% in Ethereum, and the remaining 25% is basically split up between Neo, Ripple, and IOTA. That's my own personal holding. Please let me know what you guys have in terms of percentages. Do you guys have something similar? So, overall, I do kind of agree with their allocations in terms of Bitcoin and Ethereum, although mine is a little bit different. I have a little bit more Neo and Ripple compared to them, compared to the Hold 10 index. So, lastly, I kind of want to discuss my view of whether or not the Hold 10 index provides good value for its investors. And I'm going to base my viewpoint on the fact that they're trying to be like the Vanguard VFinX S&P 500 Index Fund. So I'm going to kind of hold it up to that standard. First of all, the Hold 10 index is only open to U.S. accredited investors. So unless you have $1 million or make over $200,000 per year for the last 3 years, if you don't meet those criteria, then you can't even invest into the Hold 10 index anyways. So maybe it's a moot point. But even if you are a U.S. accredited investor, I'm not sure I would really recommend this fund, just because this particular fund, they say that the management fee will run at 2 to 3%, and that's pretty high, especially in view of the fact that it's supposed to be a passive fund. Because as you might know, Vanguard 500 Index Fund, as well as this fund, they're trying to have the allocations be very robotic. They're kind of automatically determined. There's no real fund manager that's really looking into this and making the hard decisions about moving in and out of trades. So being a passive fund, I would expect a lower management fee. Management fee of 2 to 3%, that's almost similar to an actively managed fund. So I would expect more service for a management fee of 2 to 3%. Just to give you an idea, the management fee for VFinX, for the Vanguard 500 S&P 500 index, that management fee is like 0.14%. So it's not even 0.5%, and yet for this crypto fund, you're paying 2 to 3% management fee. That's pretty high, given that it's supposed to be a passive fund. I'm going to provide another link about why it's important for your funds to have really low fees. It's some statements from Jack Bogle, and as you guys know, Jack Bogle is the founder of the S&P 500 Index Fund, and so he definitely knows about the importance of keeping fees low. Basically, if your fees are high, then the magic of compound interest or compound returns is basically killed off by the tyranny of high fees, as Jack Bogle describes. So, just to recap, Hold 10 index, it's got too high of a management fee for my personal liking. 2 to 3%, that's too high for me. Also, another problem with the Hold 10 index is that because this is a private fund, there's less oversight by the SEC. So therefore, you'd really have to be trusting these guys, these fund managers, to run the fund well and not to bankrupt the fund somehow. And in particular with cryptos, everyone's so paranoid about holding cryptos on exchanges. We don't want to hold cryptos on exchanges because the exchange could collapse, and then who knows where and how and if you'll get your cryptocurrencies back. Everyone's afraid of that Mt. Gox scenario where the exchange collapses and you can't get your cryptos back. But this is kind of the same thing. If you invest in this private fund with these guys, you're kind of putting your trust in them, in their in the sense that they'll keep their fiduciary duties and not do something crazy with your fees or be lax with security with your cryptos. So I think that's a kind of a huge risk as well. Keeping your cryptos with these guys, at a central location that is not yourself. That is, I don't have anything. I don't have anything against these guys. It's just that the entire idea of cryptocurrencies is that you're trying to keep it away from a centralized location that can be subjected to hacking, right? Okay, so that's kind of my criticism of this particular fund: the high fees and the fact that uh, you're really having to entrust your cryptos with this uh, this singular institution. Okay, please let me know what you guys think. Thank you so much for your last comments on the last video. I really appreciated hearing your viewpoints about what percentage of assets we should hold in cryptos in general, and maybe we can have another lively discussion about um, different ways to allocate among the cryptocurrencies. Thank you so much, guys. I'll see you guys next time. Thanks. Bye.